Hello everyone, this is Ahmed Al speaking to you again of Forex Trading Signal. And today's trading, we're gonna go to speak back about the technical analysis. So in today's analysis, guys, or today's training, guys, we're gonna go to speak about the harmonic chart buttons for the scalping trades. So most of the people they like to do scalping trades and they like to follow signals for a scalping trade through the Telegram channel. So I decided to make this series of videos to help scalpers to scalp trades based on their own without them having following any scalpers or any signals or any traders so they can do this based on their own experience and based on the harmonic buttons. So today, guys, we're gonna go to speak about the harmonic chart buttons, and we're gonna go to tell you how you can use it for the scalping trade. And we're gonna go to start this series, and we will start with the ABCD button first. Then we'll continue with the other buttons such as the cipher, the Gartley, the bat button, and the butterfly, and the three drivers. So stay with us, please. We will start in a moment. So first of all, guys, let's discuss what does the harmonic chart button mean and how does those buttons look like. So if you look to these pictures here, you can see there are several buttons here drawn on the chart. So I'm going to show you what does those charts means. Then we're gonna go to start with the first chart, which is the ABCD chart. So how does these buttons or the harmonic buttons was created in the past? So there was scientist, his name is Harlow Gartley, and this scientist he has found those buttons or he has identified or developed these buttons in the 1930s. So these buttons they were based on calculation and they were based on Fibonacci retracement and extension. So these scientists he has calculated those buttons and he has developed these buttons based on the Fibonacci retracement. So in other way, he used Fibonacci retracement and extension to study the market and study the movement of the prices. And based on that, he has created or developed a patterns which is found repeated several times and found successful for traders. So he has came up with those patterns and those patterns almost like five or six and he has started to name them. So the first button was the ABCD button, the bullish and the bearish buttons. And then after that, he has developed the crab button. And after that, he has developed the butterfly button. Then after that, the cipher button. Then after that, the bat button. Then after that, the Gartley button. So basically, he has identified first the Gartley button, and Gartley button is based on his name. So the Gartley button was named based on his name, and the cipher button based on the cipher, and the butterfly based on the shape of those buttons. It looks like butterfly, then the crab, then the bat button, then the ADCB. So the basic of those buttons, guys, it's the ABCD button, and that is where we want to start with at the beginning. So we want to start with the bullish and the bearish ADCB buttons. So now, guys, we're gonna go to provide you the series of these buttons, and we're gonna go to explain to you all those buttons, and toward the end we're gonna go to tell you how you can make scalping trade based on those buttons. And we're gonna go to start at the beginning with the ABCD button. So we have two buttons here. The first one is the bullish button, and the bullish button will be when the button is formed and the price is going to push back up, or that is the area where we need to buy and wait the price to move up. So the bearish button is the area where we need to wait the market to go up and we sell the market and target lower prices. So this is the bearish button. However, in this video, we're gonna go to explain a one example in the bullish button, and whatever is applicable for the bullish button is applicable to the bearish button. And next video, hopefully, we're gonna go to start with the Gartley button or any other button from those buttons. So let's start this, guys. So in this slide, we're gonna go to explain how to draw the ABCD button and how to trade the button or how to scalp the button. So as usual, guys, if you see the blue candlestick, that means it's a buy candle. If you see a red candlestick, that means it is a sell candle. So this is the ABCD button, guys, and this is the area where we need to purchase the gold and continue to go up. However, I'm going to explain this in detail now. So first of all, when the button started here, it has formed one swing low, then second swing low, then we bought from here, then we continue to go up. So how this button has formed, how this swing low and pullback and swing low has formed, and how I can predict this button, the ABCD button. If you look here, there is a point, that is the area where the price has started to go down. And we have area B, and that is the area where the price has stopped and started to pull back. And we call this now support. Why it is support? Because we have explained in the previous videos that the support level, it's the head of the triangular inverted down. So that is a support area. And we said also that the support area is an area where the price has reached and did not continue to cross it down and started to pull back. So this is a support level. However, this is also on the chart on this button. It is the point B. So we call this area the area between the A and the B points. We call it swing low or the first swing or swing low number one. And we call this area is AB swing low because it is continued from A to B. That's why we call it AB first swing low. Swing low, we have explained about the swings and the pullbacks in the previous video as well, and you can see these videos. I'm going to put them toward the end of this video so you can refer to the swing lows and the swing highs, and you can identify them easily. So the area between the A and B, it is called the first swing, and that is the area AB. So we call this area AB, and the AB, it's swing low, and the swing low, it's when the price pushed down. So in this button, it's a bullish button. That's why we have the price is moving down. So after that, we have another point, point C, and that is the area where the price has pulled back and it has formed for me a resistance. And we said similar to the support, the resistance area, it's where the price has made a triangular hit on the top and the price did not cross it or move beyond it. So it is the triangular of the hit. So that is a resistance area, and we call this area C. So the area between B and C, it is the pullback, and we call this movement is a pullback. So now, why we call this swing low and why we call this a pullback? Because The swing always in its nature, it has to be longer than the pullbacks. When you want to identify pullbacks, the pullback movement has to be smaller in the movement than the swing low or the swing high. So the first swing was long, and this we name it pullback because it's small. However, if this pullback was longer than the swing low, then this will become swing high, and we're gonna go to it a pullback in the lower direction. So this is in the future, you're gonna go to understand it in a bit detail. So now we have swing low, which is AB, and that is the first swing low in the button, and we have BC, and that is a pullback from B to C. Now there is a condition for this pullback. According to the button calculation, this pullback has to be when you put Fibonacci retracement level from 0 from here to 100 between the area A and B. So I'm going to bring Fibonacci level. I'm going to put the 0 on the point B and the 100 on the point A. And I'm going to measure the retracement on this swing low. I don't want to measure the pullback because I'm going to decide whether this pullback within the condition of this pattern. So what I'm going to do, I'm going to put the Fibonacci 0 level at point B and the Fibonacci 100 level at point A, and I'm going to measure this swing. So the moment I measure this swing, I'm going to take the Fibonacci level of 38.2 and I'm going to draw line. And I'm going to take the Fibonacci level of 78.6 and I'm going to draw line. So the price here, the price, when it is moving back down to make the other swing low, it has to be within the 38.2 and the 78.6. That means the price cannot touch this level and cannot close below this level. So for example, if the price moved like this and continued down, this means that the button is not accurate, not appropriate. So if the price touch here, close above it, this means that the button is not accurate, not complete. So what I'm going to wait the price to close between this area. So any area the price closes here, it is acceptable. It is the area between 38.2 and the 78.6. So now I have already taken Fibonacci retracement and I have had the price closed between the 78.6 and below it and above the Fibonacci retracement level of 38.2 and close above it. So below 78.6, above 38.2. Now we call this movement is EC, and this is the pullback of the button. So now you see this is the retracement, and the retracement started from 0, and we're supposed to have the price close in between these two levels. So this is the first condition. So now the second condition, that the price has to move to point B, another swing, and that area we call it point CD. So now I have had the button completed. So now I can name this movement here is CD movement because it's between the area C and D, and we call this the second swing low. The second swing low. This is the first swing low, this is the pullback, and this is the second swing low. And you can see now that the pullback is comparatively, it's smaller than the first swing low and the second swing low. So that's why we call these a pullback. Now this is the CD point and this is the second swing low. Now there is a condition for the second swing low. Realize with me that there is no condition for the A and B This can be any movement. However, the condition is only for the movement between the B and C and the C and D. That is the only areas where I need to apply the condition. And the condition on the PC, it's based on the Fibonacci retracement. However, when the price move from C to D, it is based on the Fibonacci extensions, not the retracement. So let's calculate this and see the condition for it. Now we're gonna go to put a Fibonacci here, and we need to have the level from 0, 100, 127, and 161.8. So now we're gonna go to flip the Fibonacci and put the 0 level on the point E. And again, we are measuring the same area to calculate the Fibonacci retracement and the Fibonacci extension. So previously we have put the 100 on the point A. Now we are putting the 0 level on point A, and we are putting the 100 level on the point B. And we are seeing how much is the extension for this swing, for the CD swing. So that swing has to be between two levels. That two levels is the 127.2%, and the second level has to be the 161.8%. So if the price crosses the 161.8 level, that means that the button has failed and you cannot take this button. Now, if you have a button like this and you have seen the price has started to move up, then the button has completed and the button is ready to trade. So how we can trade this button, guys? Now, if I start to see a bullish candle here, which is a blue color, now this is the time where I can make my entry, and based on that entry, I'm going to put my stop loss. Now, there are some traders where they put their stop loss based on the next level on the Fibonacci extension. However, for me, it's amount of money, and that amount of money, I'm going to risk it. For example, if I'm trading with $10,000, I might risk from my account $200 or $100. And based on that, I'm going to evaluate the size I'm going to put and put the required stop loss. But however, you can go for the next extension level here and you can put your stop loss based on it. For me, I'm putting amount of money, and based on that amount of money, I'm going to calculate my risk based on the size. However, if you started to see a bullish candle here, that is the area for the entry, and this is the area for stop loss. And now most of the traders they do take a profit based on the retracement from A to D. However, my always take a profit will be the area of the resistance, which is this one. So this is my first take a profit. The resistance point B, it is my first take a profit. Then the resistance point C, it is my second take a profit, and the resistance point A, it is my third take a profit. So this is how I make my take a profit and I make my stop loss. Also, guys, you can see that there is diagonal line can be drawn from the area A and C, that is will be forming a trend line, and I'm going to take that trend line also as a resistance level to calculate my take a profit if I want to make another way of having the take a profit. Now guys, these buttons you can find them on the 1 minute chart, on the 2 minute charts, on the 3 minute charts, on the 5 minute charts, and so on. Those buttons, they are very useful for scalping trade. So if you are a scalper, if you want to scalp trade, this is the best button for you to scalp trade. You don't need to monitor news. You don't need to monitor price action and so on. The moment you see this button, you just enter your trade, put your stop loss, put your take profit, and leave the chart and move on. So this is the best way to scalp these buttons, and this is the best scalping buttons I have seen in my experience. Now guys, in next video we're gonna go to explain the Gartley button, hopefully. And finally, guys, if you like this video, hit the like button, subscribe to our channel, share this content with your friend, with the community, so we can achieve more people and we can distribute the benefit. And don't forget to activate the bell icon so you can receive everything new from us. This is Ahmed Al Azaiza was speaking to you and see you in next training video.